Hello and welcome to the Chart of the Week. My name is Pete Stolzers and I'm the founder of www.oneoption.com. Before I get started, I'd like to encourage new visitors to view the introductory videos. If you're watching the videos on YouTube, the introduction is a three-part series. They describe my systematic approach to option trading. To learn more about my approach, please visit my blog. It uses the number 1 in the web address. To try my research products, please visit my research site. The web address spells the word 1 out. Both sites are linked, and www.oneoption.com will ultimately get you where you want to go. Before I get started, I want to mention that on YouTube, the Chart of the Week video is divided into two parts. Make sure to watch the second part since it has the highlighted stock. 75% of all stocks follow the market. That's where my analysis starts. Let's take a look at the market action. This is a one-week chart of the SPY, the S&P 500 Depository Receipt. Here we can see that the market was relatively quiet, kind of in a tight trading range, and then 3 days ago it actually drifted down and tested that 132 support level that we know dates back to the lows last March and last August. Stock found support there, and then today we had a gap up opening that almost took us through that horizontal resistance level, and then the market rallied the entire day, closing right on its high of the day. Very, very strong price action this week. As I mentioned in last week's video, I felt that the market was forming a double bottom and that a support level had been established. Let's take a look at the 1 month chart. Here we can see very choppy, volatile price action. Two-sided trading. Market rallies up, gives the gains back. Rallies up, gives everything back. But what we can see here is that the 128 support level is held. It's been tested twice. We also see that there's a formidable resistance level around 134. Today we actually broke through that level. So let's see what the 1 year chart looks like. Here we can see the high that was formed last October and the deep selling that's taken place during the last 4 months. We can see here the initial January low that was made. We can see the retest here. Now these prices are on a closing basis, so you won't see the absolute trough here. But this support level was tested twice and it held both times. Now we can see how the market has actually rallied up and it's challenging this resistance level right in here. I feel that if the market can break through this SPY 138 level, that it has a chance of running up to potentially this 143, 144 level. So that's the type of move I'm looking for. As a result, I'd like to focus on bullish trades today, and I want to take a look at a particular setup that's called green line. And what that means is the stock opened near its low of the day, traded through higher throughout the course of the day, and closed very near its high of the day. So without further ado, let's take a look at some of the trades that came up. The setup we'll be looking at today is called BDRE green line, and that stands for bullish day reversal early. The stock opened near its low and it's trading near its high on an expanded daily range. The stock has an intermediate term uptrend and it's showing strength. Here you can see the BDRE green line label at the top of the column, and these are the stocks that we're going to be taking a look at. I won't go through every one of these stocks because it would simply take too much video time, but I will try and focus on the stocks that look the most promising, and I'll also try and throw a stock in there that really is not demonstrative of what I'm looking for. So a bad example is often a very good learning tool as well. This is the 1 week chart of the FXI, and it represents Chinese shares. So remember, we're looking for a reversal. I would ideally like to see an uptrend, a pullback, and now we're reversing that pullback. So I do want to see a long-term uptrend. Here we can see that the stock has been gradually grinding its way higher. We've got the gap up, and then the stock opened near its low and closed near its high, forming that green line I referred to. On a 1-month basis, you can see almost a V-type formation where the stock comes down, finds support at this 125 level, and then recently it's really shot up. On a 1-year basis, this looks like Mount Everest. Stock, or the index I should say, rallied very, very strong, and look at what Chinese stocks have done. They're down about 37% just from the start of the year alone. But we can see here that it looks as though they might have found a support level. We also know from this parabolic curve that there is a tremendous amount of strength and growth in the Chinese market. So the fact that it's pulled back and taken out some of the speculative fluff and now it's reversing higher might not be a bad time to go in and try and play at least a bounce in these Chinese stocks. A lot of the stocks that are in the list today are actually Chinese stocks, so they are reversing and they all have that same pattern. So I'm going to flip through them very quickly. They will mostly be resources companies, so we can see here the stock is rallying up. 1-month basis, it has that deep trough and the rally out of it. 1-year basis, we can see that parabolic move, but this stock really hasn't pulled back that much, so it's formed a nice base and it might actually be staging a nice rally from here. Here's an emerging market stock, Brazil Telecom. So perhaps all of the emerging markets are going to have this reversal type formation. You can see nice steady gains even before the big rally today. But here we can see how strong the stock is going right into the close. 1-month chart, not quite as deep a trough as we saw in the Chinese stocks. We can see it poking through a 1-month high here. So this looks pretty encouraging. We also see that the stock never really pulled back like the Chinese market did or our market did. So the fact that it's moving higher, it looks like it might be taking out this resistance level.